Could this be the most important chart that we could be looking at right now? Hello, ladies and gentlemen, and welcome back to a special weekend edition of the Markets Around the World. We'll be discussing stocks, commodities, and cryptos, and more importantly, looking at the last 2 days of skew crush and the rotation that we've just seen. Non-farm payrolls came in hot. We've got T-bill issuance at a new extreme this week thanks to the debt ceiling. And realistically, we have a whole bunch of options discussion to be had. Did someone just sell a lot of calls? We'll be talking about that later on. Let's get into it as we discuss markets. Well, welcome back, everybody, to the daily show where we talk about markets around the world. We've got the news, latest indicators, macro data, and of course, the hottest charts coming your way. If it's your first time here, welcome to the community. Subscribe, smash that like button. I'm sure you're going to find a lot of value in today's video. We've got a big show ahead. So let's discuss the bear market exit. We've seen a move on breadth. Finally, we saw a rotation into a whole bunch of other sectors with the Russell 2000 and others actually starting to break out. But does this mean that we're in a new bull run? Well, of course, it's often considered when you go from the bottom 20% up to the new high of over recovery of 20% gain that you are in a new bull market. Now that's around 4,300, and we've discussed the 4,300, 4,350 possibility for a while. With skew compression at such an extreme though, we're going to need to be ultra cautious around here, as this is where everything switches. And of course, usually you see a pullback before you will get a full run, even if you're going into a new bull market, which we'll talk about. Let's discuss the idea of 339,000 jobs being put on. It's hot out there for the US economy, and the Fed probably has more work to do if they're going to get it under control. But the market initially liked it. Unemployment went up to 3.7%, but we also saw some massive revisions. I mean, these joke numbers, they just get more ridiculous by the month. We can see here March was revised up now, 52,000, and April was revised up now, 41,000. So from being negatively revised to now positively, it just shows you how ridiculous sometimes these jobs numbers can be. Anyway, let's have a look at change in non-farm payrolls. Basically, we saw here a pretty big switch. Obviously, professional and business services and private education and health services were some of the best, and a lot of jobs got put on as well through the government. So yeah, more of the same, a pretty strong economy in the US. And during normal times, if the Fed wasn't trying to fight that a little bit, you'd say, damn, this looks pretty good. And no wonder certain stocks have been doing well. Now, at the same time, do we finally have some breadth move out? Well, let's have a look at the survey report here coming in for the US markets. What do people think over the next 6 months? Well, we've got the reports here. And for bears, I'm sorry, it's not negative enough yet. You need less bears, more neutrality, and way more bulls. You know, we need these readings. Can you look at a date here? 1 year bullish high. Take a look when it is. 37.5%, week ending February the 8th. So what happened then? Markets fell pretty much a week later. We really do need everybody on board the bull train for markets to be able to fall, but the skew is promising. Let's have a look at the biggest players. Were they actually rotating out? They're neutral still. They're still purchasing with more bullish movement. However, they're mostly neutral. I would say this is kind of like a 60-40 split. If they get $1, they're putting like 60 cents into the market, keeping 40 cents back for some kind of pullback at some point. And it's really still mostly cautious in these markets. If we take a look at the gold runs, you can see here that gold has been getting shorted a little bit more, or at least people are buying less. That's showing up in price action as well, where we've seen gold weaken. If this continues, of course, what do we expect? Gold to continue weakening. We'll be on top of that one. The US dollar, people can't understand it. In recent weeks, we've seen an uptick. We knew as soon as we saw this uptick, along with that giant bullish weekly candle, that we were probably going long. We've hit a resistance, we've dropped down, and in fact, gold and dollar were some of the most predictable markets through the Friday session and also through the last couple of weeks. We've really been on top of those ones the most, I would say, on the channel here. It's been a lot easier than just looking at, runaway AI stocks and then going, okay, well, this is still bullish. Where can we get the close? Where are we going to actually see this sell off, et cetera, et cetera. Remember, there are many markets out there and tons of opportunities. So never feel FOMO. There's always another one coming around. When we take a look at Treasury notes, you'll notice Treasury notes are still in huge demand. So a lot of people are freaked out about this one. We'll talk about it soon. But realistically, Treasury notes still being purchased at an incredible rate here in markets. Although leveraged money is trying to short it, it's an interesting one. Let's have a look at the T-bills here. We've got an upcoming auction That's obviously a big one. Everyone's talking about this on Twitter and everyone's getting wild on it and how scary it's going to be. It depends on your time frame, doesn't it? But you can see here 13-week, 26-week, and 44-day. We've got 65 billion, 58 billion, and 50 billion coming in, a whole bunch of other T-bills coming up. And yeah, I mean, this is expected. I mean, the debt ceiling, etc. We'll have a look at a chart on what's happened historically around debt ceiling hikes with T-bills, because it wasn't negative last time. So will it really be negative this time, even though everyone's, starting to say, oh, it's horrible, it's going to be shocking? Well, we'll have a look at the history. So let's discuss, of course, one of the other sides here, which is, of course, Fed hiking cycles. We know that the Fed doesn't hike for any reason other than to stop or cool the economy. Generally, on the hiking cycle, they cause recessions. And I just wanted to show you here that 11 of the last 14 hiking cycles landed in recession. And you can see here the soft landings versus the recessions. It's only 3 soft landings in very special circumstances. The odds are still not on your side, but we do know that you can't have a recession generally ever before uninversion of the yield curve. We'll talk about that later on. That's where the US 2-year goes underneath the US 10-year again. So instead of being above, it goes underneath. And then the other thing that we need to see is actually the jobs numbers cooling. Did we see that? No. So it's very unlikely at this stage that we're even 6 months away from something like that being called. Let's talk about the most significant spread in history of consumer discretionary. We brought it up on our last video, and we basically said that consumer discretionary was weirdly not coming with the market. It should have been the next rotation. Funnily enough, it had a good Friday. But here's the big movement, and you can see here that equal weighted was terrible in comparison to the mega cap. And the reason why is because the mega cap consumer discretionary, which by the way, I still think has a very good long-term, kind of plan on it for AI. I think it has real initiatives there that AI can make work for them. It's actually looking at, basically 2 or 3 stocks running that whole entire sector, Amazon, Tesla, etc. Discretionary after a 3-month range. So when we get readings like this, you can see that we often get very bullish next couple of periods. Funnily enough, we just saw a very bullish day. And then we get like a kind of lackluster couple of months after that. So are we about to hit some serious peaks on these markets? 4,300, 4,350, big levels, certainly ones to watch. When we're talking about seasonality of pre-election years, you tend to run through June a little bit. Yes, we're in June. You tend to run, especially the NASDAQ, through June into July. Then we get that dreaded Q3 slowdown that tends to come through. Now, in pre-election years with debt ceiling years, they've tended to be worse. So again, if it's more likely to sell somewhere in that July, August, like I've said a few times here, there's a reason I've set for 4 months at 41.50, and it's because, I think September, October, August, they're going to be the months if they're going to happen. Debt ceiling seems to have been going through. So at this stage, of course, when the limit is changed, it's usually got a slight negative effect after the fact. It's a buy the rumor, sell the fact, or at least sideways the fact. As we approach 4,300, 4,350, I'd expect us to have a little bit more boost in us, and we'll talk about that now. So first up, the skew. That's a compression. So that's exactly what you're looking for if you're a bear. You want to see the black swan indicator get wrecked for a couple of days, which it has. That's pretty much an activation there. Now what you need is defensives. We need defensive sector rotation. We need to see these sneaky people starting to get into it. And I will say, I was watching the session and it started negative. We'll go through that soon. So skew's been compressed. We've seen skew compression during most of the other sell-offs in the last basically year that were any significance. So we saw one in April, and we obviously saw one in August. They're generally before the fact. So that's something that's interesting. PCC, put call ratio. Look at this, dump to new lows. This is a significant low. So basically calls everywhere. Everyone loves the calls. What would you like to buy today, sir? I'd like a call. Not a put anymore, it's calls. So that's a good thing. And I guess you're looking for that to continue, especially if we start to hit 4,300. And what you're looking for is if it does sell off, then it usually picks up a little bit. During all of that, you don't want an incredible movement directly into puts. So remember, people have been burnt heavily around this year. Obviously, there's a lot of burning of puts. If you look at put right, which we've talked about before on the channel, it's one of the most profitable years to be writing puts ever. And eventually that will, of course, run out, but timing will be everything. So you got to put the evidence together, which is what we try to do here on the channel. So make sure to subscribe if you're interested in those things. Let's have a look here at the S&P 500 stocks are above the 200-day moving average. Nowhere near February, but certainly improving. Is this a double bottom on that? Interesting. Good breadth start to pick up. I'm liking that, of course, if you're a bull. Let's have a look over here, but not necessarily for tech, more for the other sectors. Percentage of stocks above 20-day average starting to improve as well. That's usually a probably pretty positive sign. And finally, a red candle on the NASDAQ versus the Russell. Yeah, look at that. Finally. So is it the over for the NASDAQ? I would say based on multiples, NASDAQ will only have, a little bit left in it. Whereas if you're, of course, looking at bullish, it's probably now time to start to think about the rotational circus. That is, of course, if you're bullish across the board. It's only one read, but it makes sense. This is what happens. We tend to get runs. While there still may be some gains in the NASDAQ, overall, there are much cheaper sectors in the market. And if you're a full bull in this market, that's what you're looking at. Let's have a look now at treasuries, because, of course, everyone's freaking out about these, and they're all like, it's all over. Treasuries are going to burn. Well, historically, that didn't happen last time. Now, you might say, okay, well, T-bills, it's different this time. But actually, we saw a rise in T-bills coming into the debt ceiling component. And then it got crazy. Everyone wanted treasuries. We're still seeing pretty large asset purchasing. We're seeing huge negative bets being bet on it. That hasn't worked out in the past for a lot of people, going hugely negative on certain markets. And specifically, of course, if we've got too many people believing that it's a horrible problem, then it tends to often go the opposite way. So treasuries, I would say, have, if I'm talking middle term to maybe longer term, I still think T-bills are very interesting. While they could fall off initially in some kind of freak out, similar to this type of thing, I still think that they've got a good tailwind here on them, and we'll look at those very, very soon. Let's have a look at the treasuries themselves. 100, of course, a notable number for treasuries. And then underneath that, if we got down here, you'll see I've got a little box down here. This level around 08, 09, 11, this would be incredible. This would be a very interesting zone. And I'm interested to see whether, if that could happen, I think investors would come in hard on T-bills. You got to put things in perspective. Take a look at T-bills and have a look at where they are. Are they cheap historically? Are they expensive historically? I'd say they're damn well valued. It's not that bad. And this is, of course, overpriced. This is still overpriced. But the reality is, up until here is very, very possible. Now, of course, proceed with your own risks and caution, all those types of things. But T-bills in general, they didn't perform poorly last time. I have no reason to believe they'll perform horribly this time. You have to back America in terms of financials. You cannot say that they're going bust first. I'm sorry, but I've got a question here for the chat. I'll put it in a poll. And I've always got this question. The reality is, people keep saying the US dollar is going to fail. Let's face it, the US dollar cannot fail before other currencies would fail first. And I think you just need to always remember that. And of course, also the strongest economy in the world can print more than anybody else. That's my belief. But anyway, there's a reason I like the US market. And a lot of that has to do with that underlying belief that the US can do whatever they feel like, at least for now. Let's move over to the copper. And copper was looking pretty good, and then it rejected. So still the supply holds. We'll have to find out whether copper does start to find strength again. That usually shows you're actually in some kind of recovery. We've been talking about demand destruction the entire time throughout, the last couple of months. It's been great for metal shorts. We saw metals come back a bit thanks to copper coming back up, plus also those strong jobs numbers. But if copper keeps declining, we can't deny the facts. Why is it declining? It's demand destruction, and copper tends to front load it. Where are the bulls excited about? Well, yeah, central bank liquidity. What the hell are these guys doing? It just keeps injecting. How can you go down when you keep getting injections of these bloody central bank liquidities all over the place? And it's across the board. You can see here versus the Qs. We're still very, very, very extended on the Qs, by the way. So that's why I think relative performance is going to be lower on the NASDAQ now moving forward with some of the signs we've seen. But central bank liquidity continues to get injected, even though they're tapering off the book. It's sometimes it seems ridiculous. What about bond index? Well, you can see here that the VIX versus the bond volatility is still around the 94th percentile in terms of spread. They're still concerned about it. US dollar has remained relatively strong as the market's going up. That's certainly a question mark, but it's most likely to do with the T-bills. So that's part of it. However, historically, when we've seen US dollar go up, the markets have started to wane. So as we hit 4,300, as we move towards these big resistances, it's something to keep in mind. VIX is also about to hit some extreme lows. So you can see here, this is literally the VIX low of the entire time throughout pretty much this whole crisis that all started in 2020. We're about to hit that 14.13, maybe worthwhile having an alert. Hitting 14.13 as we hit a 4,300 to 4,350 on the S&P, certainly interesting, and I would keep it in mind. Utility stocks are oversold. Consumer staple stocks are oversold. We obviously talked about that, but I want to get into this flow. So this is a share off Twitter, and basically it's a pretty interesting one when you think about it. Effectively, it is a whole bunch of short calls. So you can see here, sold calls. So these are sold calls to open. And take a look at their strikes. 4,300, 4,290, 4,300, 4,300, 4,300, and some put, and then another one. So these are fairly large premiums, and they're all coming in. And look at the dates. They're basically selling premium over the next, let's call it, month. And they're starting to say, well, I don't think the market's going up very much more from this point. That's what all of it. Look at it. It's ridiculous. It's a lot. So they're loving it. They're opening up the old calls. And they're saying, I love the premium. So will this start to actually top the market around 4,300, 4,350? Well, of course, the strikes would say, yeah, very possible. And the options have been pretty reliable recently with this type of stuff. Let's move over here to the options flow itself. We saw big movements. Now, interesting, look at the call volume starting to get up there with the put volume. So all of a sudden, we've got big switches there. Still got a lot of puts on the queues, but of course, calls are going up across the board. Tesla was probably one of the more interesting ones in terms of just having tons of 220 calls. So everyone's like 220, 225, a lot of short dated calls, which remember the short date ones are pushing it up, and the long date ones obviously sometimes put in the floors. Disney was one we discussed about the floor possibly being in, had a great session, 2.5%, is not too bad. And you can see here, it's actually did an island reversal. So if this is a real rally, we should see some individual stocks start to pick up a lot. Russell was also interesting, less calls than puts, but there's overwhelming amount of puts on the Russell. So the Russell's been one of the most putted things in a while. If we scroll down here, 59% on the call rate. That's getting high. That's getting very high. 47 million options. Look at that. That's big. That's over the normal 40. So it was a huge options day with a ton of calls, with everyone YOLOing all over the place. And of course, then all of a sudden, a whole bunch of people, well, some large players gone, I'm going to sell some calls on top of everything. So they're obviously betting on stagnation or possibly a little bit of over exuberance here, a little bit of FOMO coming through this week into maybe dying off a little bit after the Fed's mid-month announcement. Of course, that's where they may announce 45 basis points, although people now believe they won't be doing that. We'll find out. Let's have a look at the big positions here. So you can see Qs made up the significant kind of volume. Then we had IWM. And again, you can see the puts were bigger and the calls were smaller on IWM. That one has been getting stacked with puts quite far out. A lot of people going very negative on that sector. Gold, etc., and a few others, we're having a little bit of trade on them. But what I'm more interested in is when we go over here to the SPY. Notice these short date calls. All the short date calls, 427, 426, 428. Look at that. 1, 2, 3, 4. Top 4 positions, all calls, all short date. One on the 5th to 428. But realistically, we're starting to get up there. If you keep seeing these 430s and 435s, in terms of the call rates, I think you're going to most likely, hopefully, start to see some puts come through on those strikes or just slightly underneath. Scroll through, you can see SPY made up the biggest trades of that session. Now, Tesla 220 was one of the big strikes here. You can see 220 getting struck, 210s again, all 0 DTEs, and a few coming through for this week ahead. So will Tesla be able to get to 220? It seems like a few call riders are call buyers are trying to get it there. And I think Tesla, Amazon, NVIDIA certainly backing off. And as you scroll through here, you can see NVIDIA, more puts actually starting to appear onto it. So maybe it is being a turn here, and we'll look at the charts soon for that. Let's move over to the announcements. 25% of people now only believe a 25 basis point hike will come. This is economists anyway. And you can see here that it's a significant switch from them being almost 70% only a week ago. No one has any idea. It's pretty clear of that. Let's have a look at the sessions. And this is the last 5 days. Consumer discretionary having a stonking good job. Of course, we also got regional banks doing well. XLK has remained good and semiconductors, but it'll be a different story when we look over the last 24 hours. And of course, gold was doing great, and then it suddenly wasn't. Metals up as well, thanks to that switch in yields, which occurred. So you can see here, most of metals gains were all on the Friday. Non-farm payrolls came in super hot. Yields went up. Metal likes that, and we saw 4.26. Energy also liked that, plus into the OPEX. But look at the difference here. The downs were semis, technology. That was like rotation circus. And look at the defensives. Now, interestingly, look at where the defensives came from. We'll show you on the chart. They were all negative in the morning, and then they kept grinding up higher. I'm looking for defensives here very much to see whether they actually have a couple of days of overperformance. If they do, then I feel like that with the skew, with a few other things, and the 4,300, 4,350 possibly hit here, we might be starting to see the real signs of, if we get a technical signal, an actual swing move. That would be pretty exciting if we saw one. That'd be a while. At the moment, it's been mostly bullish for a while. So just before we jump into the charts and we take a look at everything to do with the hottest levels right now, I wanted to talk a little bit more about rotation. And I thought it'd be a great time to also discuss the sponsor of today's video, which is Tiger Brokers. Now, if you're from anywhere around the world, you can check out the description down below for the special offers. But if you're from Australia or New Zealand, you'll be able to take advantage of a new special offer of 50 Microsoft fractional shares when you fund with as little as $1,500 over the first 7 days. That's on top of the normal bonuses you get for checking out the platform. So let's have a look at the platform together and discuss the last 10 days. Now, you'll see a bit of a shift here. So I don't think it's a surprise. Everybody knows semiconductors have been on fire, and realistically, it's been tech, 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 tech. However, something changed over the last 24 hours in markets on the Friday. And what that was, of course, it was a rotation out of semiconductors as we see NVIDIA and the likes of AVGO, which we'll watch soon, possibly have blow off tops, and a movement into the other more hated sectors. Take a look at the best ones for the day. Regional banks, diversified banks, specialty chemicals, defensives in general. And we saw a significant switch, as we already talked about, through utilities and staples, where they started negative and then started to run throughout the day. Is it a defensive move? We need, of course, really 2 to 3 days in a row to start to say, we know what you're doing, Wall Street. And along with the skew, that could be very important. If you're interested in things like this, remember you can do it all in the platform. If you want to know which are the best performing industries over the session or best perform industries maybe over a week, you can do so. And it's really, really helpful to be able to jump in. You say, I'm interested in gold stocks, and to be able to see all the major ones straight away there. So what are you waiting for? Check them out in the links in the description down below. All right, let's move over to the charts. Dollar index first. Dollar index back to criticals. So somewhere in this area between 104 and 104.28, we expect the bears to have to really hit it if they're going to. This is going to be more of the day trader, scalper kind of way of doing things. This is certainly an area of interest, and it basically followed the path that we thought it would. We sold off, we found the buyers, fantastic. We came back up into our critical zone. If bear's going to take control of the US dollar, they should do it relatively around here. You can see gold getting compressed back down, pretty bad weekly. Daily came back to really our trend line, which is pretty much what we expected. Again, dollar up, we expect gold to get hit. Gold got hit at the supply, so this is the heavily traded supply zone. If it's going to find buyers, needs to do so pretty much within the next $5 an ounce. So buyers need to commit while the dollar needs to weaken through the next couple of sessions. If we're going with one of the most powerful sectors that was pulling the markets through the Friday, it's going to be XLI. Is this an island reversal back in terms of it's going through? Might have a little bit more in it. Basically, when I see XLI, I don't tend to see as much, full on, consistent, constant runs that come off this sector. But if it's going to break out, you can see here 102, big level for it. And it has had the momentum through at least the Friday, an island reverse on the back. If it was an accumulation, maybe it will go. Let's move over to US oil here. You can see that oil has recovered quite a lot. 2 days worth of recovery, coming back into one of the most traded zones. For oil bulls, you're going to really want to see this thing take out this most traded zone, pretty much $78 a barrel. That's quite far away. For bears, anything in here is very interesting. And then, of course, the next level would be around that 78, 77 a barrel. I wouldn't fight it in here too much. I think it's going to be very, very tough. If we take a look at the weekly, I'm not as negative on oil at the moment. I've stated why. I believe it generally has a run in the early of June area, plus the OPEC stuff. And then we tend to, get a little bit more of recovery into what usually would be demand destruction. If we take a look at the defensives here as we get into the market, I want to talk about this. So we've seen big trade volume, interesting. We've seen an interesting base, certainly happening there. We've got utilities and staples starting to find their feeding. And I'm looking for this to continue. I basically want to see buyers recommit to these defensive stocks that they have sold over the last couple of weeks. Of course, they've been one of the most hated sectors. We've reported on it many times, oversold potentially, TD9s, all sorts of things. But it's more important to actually see that the market's going defensive. So if the market is going defensive, usually they'll rotate into XLV, XLP, REITs, that kind of thing, and XLU. Well, there were some nice breakouts here. Obviously, on the weekly, you can see some rejection wicks. That often means that there are orders being placed around that, and volume was pretty consistent down near the lows. What about Tesla? It got a new high on it, maybe 228 this week. It's possible. It broke out. It's very unlikely that, it's basically on resistance, you can see here with the daily, but it's very unlikely that these calls don't continue usually on Tesla for a little while. I'm waiting to see a real switch there on them. I've said that I don't know if this is very technical. I think it is more driven by these short date calls getting wild on this stock. And that's why you often see with Tesla, huge rallies with almost no pullbacks. It's because everybody just jumps on the call wagon and they all get hyped, and then you have to start to wait for the puts. So Tesla, be a little bit cautious here. I still don't change my fact that I think this thing is going to go to 145 in the future. However, this is trading, so you've got to look at it and say, well, have we seen the puts start to appear yet? AVGO, I think this thing is probably in blow off. So what that means is we dropped around 13+%, 15%. We probably see a rotation into it still as people buy the F and dip. That's what they say. And they get excited about it. I'm not a big one on that strategy. But what I can say is that this is symptomatic of the end of a trend. And I think with the weekly close being like that, it's consistent. Strategy like this or strategy like this usually is common. And it's what allowed us to believe that there was a rotation that was probably occurring in the back end of the markets. And you saw that with underperformance of tech stocks through the Friday session and really a bit of last week. Let's have a look at NVIDIA here. NVIDIA didn't drop as much, but AVGO might be the lead for it. Certainly hovering around these upper zones. Obviously, you could see that as an island reversal with a gap up, gap down, then just a retest to go short. I'm not big on shorting these types of things. I don't really like doing that, but I like to, spot it. If you did want to short, would it be safe to do so here? I think time will be your friend. So you'll need a bit of time. And unfortunately, it can take a while to degrade a position that had so much strength in it. Does that mean that NVIDIA is going to zero? No, but it was named in Cramer's Magnificent Seven. So you got to be careful about that one. I posted it on Twitter. It's pretty funny. Disney over here, nice island reversal for Disney. We spotted it with some of the unusual options activity. Obviously, volumes have been increased as well down here after the earnings report, which probably shows us some kind of pig, some person with information has been starting to pick up a position. That's a good island reversal, maybe a couple of days swing for Disney moving forward. That's usually a bullish sign. The type of way it's traded and all of those things make sense. Let's go over to Apple. Has this hit its high? It's now the highest weekly close that we've ever seen. So there you go. It's still doing pretty good. Up 0.48. Yeah, I mean, I'm just saying watch reaction here. I'm gonna set alert for 182.93. That could be a good day trade level for shorters to come through. We've got a pretty extended market, and we know that this is an all-time high. So there's going to be a lot of stop losses sitting behind that. I wouldn't mind to be patient and react to that, see what happens. Let's move over to the DAX. Strong session for the DAX. DAX cannot get underneath here. We reported on the idea that Europe was relatively weak in comparison to the US. Pretty important point for it coming forward. Obviously, we know that we're at all-time highs on this particular index. That is the 16.3 level. And we need this level to be closed for swing trader shorts to actually come in. There are still no shorts active on most of these markets. The only one that's a little bit negative has been, of course, the Australian market. Now, that will open up bullish because of the metals moves, so that will be big for Australia, and will probably push us back into around that 72.20. You can see here the trend line that we've been talking about, the 61.8 fib of the retracement. But if we manage to get underneath this low, bang, straight down to 69.50. I still remain negative on the Australian market, but really, of course, I'm watching copper heavily here. So we need to spot that. And if we do breach this high here again by too much, I think, maybe you have to give up on the short for now. But at this stage, it's still in play. It will have a pretty good session though when it opens. This is the one everyone wants to talk about. And of course, it is the Russell breakout. Yes, small caps finally had a good day on them and it closed above. It's hard to hate this when you look at it on the charts. Much cheaper PE, historically low PE. We've talked about it many times, forward PE, etc. If you believe a new bull market is in, then, realistically, this is relatively cheap. And it's kind of the story, if we remove that for a second, of, what generally does happen here. But, it's interesting because this is based, I've never seen it based like this during a full recovery. Usually you see a nice pickup, then it slows for a while, then it comes through as the pickup continues. In this case, it's just sitting around. So yes, that's a breakout. It's probably the most obvious breakout in history. And because it's obvious, sometimes I am a little cautious on it, though, it looks significant. Weekly closed above, daily's closed above, 1810's been a big level for us a while. Obviously, it hit people up last time, so it looks less trappy. Where's the next stop for IWM? Well, it's probably 1880 to 1920. So good supply here and a good little target level for these. I mean, how much percentage is the way? So we're talking about 3 and a bit % on the index. So interesting point. Certainly starting to get that rally through on it. Let's have a look at the Qs. They were relatively weak in my opinion, 0.64% up. In comparison, the Russell was up 3.5, the Dow was up 2, and the US 500 was up 1.36. So that's a big difference. Now, if we look at the Qs, they're on a daily high resistance, but they're not quite at these top peaks. Now, these were the peaks that we formed in April and Jan. So there could be still a little bit more run. Let's do it as a percentage so you can see how much more it's got. That's actually a 4% hike in terms of the top end spikes. And these points here would be around 2. So there still could be a little bit legs left in this market. I don't think the NVIDIAs should be running the world at this point. We've got a gap, obviously, at 361 as well. It could be filled, which is only about 1.5% away. So yeah, still no signs of bear. Still very hard to call it there, and it is absolutely extended. So if we have a look here, you can see we're at a TD9 on the daily. We're starting to get very extended. These tend to be turn points. So we've seen one of those before and we got a little turn afterwards. So we are extended. We are exhausted. The weekly is absolutely in wild town zone. It's about to probably get a TD13 on this. So if we do get a TD13, that usually will mark the topping for a swing trade. So we'll be watching that very closely along with the skew, along with defensives. Again, stacking the evidence plus the TA will help us a lot in this situation. So we're looking for that. I also think about 14,850 could be a big resistance for this chart. Let's move over to the S&P 500. 4,300 basically. Weekly's big here. Weekly close is large. I don't think we should get too much more in the weekly. So basically we push, maybe take the high out. Certainly some key points to be watching. I'm going to line a couple of these up for you. We're not going to use this market for it though. You can see here, very strong candle, starting to move away hard from the 20 moving average on the weekly. All of that stuff does count. So when we go over here, you can mark in at least your futures high. So that's 43.25. That's going to be significant. I already think the level we've hit's big. We saw 4,300 calls everywhere, sold calls, not bought calls. And this level here has trapped people before. So you can see what happened in, of course, August. We know what happened previously to that. It is the critical extreme zone number 2. And we've had that on our charts for a while. So if we actually zoom this out a little bit here, we'll zoom it out. There's the extreme zone number 2. And of course, we've got the last zone over here. So big run, came through, very, well, decently extended on the S&P, Good rotation though. So again, it's going to be, if the sell's going to happen, tech should technically drive it now. We're starting to see this rotation out. And these are the zones that you wait for really good technicals. So I think it's going to take a few days to set up through here, but yeah, very, very interesting zone. Let's move over to Bitcoin for a second here, or Bitcoin, as a few of you like to know it as. Yeah, we've got 27,000 here for Bitcoin, and it is still looking weak until we prove otherwise. So until we get through the most traded zone, 29.5 is the next level. Past 29.5 with the daily close, we're going to snap that high, I would say, and we keep going. It's a 61.8 of the low to the high swing. So you can see why buyers are here. Probably still remain negatively biased onto Bitcoin. And the reason why is because, well, let's face it, we are below and we have a giant head and shoulders on the higher timeframes. So still looking for 24,000 on this one. Yeah, I don't really change any of my opinions on that. Short term, you could go long at certain points, but until we trade out above these most traded zones, I've got to remain bearish on it. Let's move over to the news for the week ahead. We got the information coming out, but there's not too many things. RBA rate statement for Australia. That'll be an interesting one. Probably expect them to hike interest rates on houses. We'll find out, or on the economy, but realistically it's on houses. Then we scroll through here. We got unemployment claims. And I think there's also one other bit of data, the OPEC weekend. And yeah, it's pretty weak here. ISM Services PMI, that's the one on Monday at 10 a.m. that I was looking for. So probably the big bit of news is this. And then, of course, we've got the T-bills. And we'll just have to find out what else is happening this week in the wild world of the markets. If you enjoyed today's video, remember to subscribe, smash that like button. You can get 3 free trading cheat sheets by looking at the links in the description down below. And, of course, checking out all our other links as well. And if you're interested in the sponsor of today's video as well, which is Tiger Brokers, look at their special offers. And if you're from Australia or New Zealand, it's a limited time offer. But remember, it's not too bad. I mean, you can just check out the platform, fund it with a bit of money, and maybe get some free Microsoft stock as well in the special offer. Thanks so much for watching, everybody. We'll see you in the next one. Have a great weekend. Bye for now.